Hey, thanks for tuning in. This is a weekend review for the week ending July 2nd, 2021. Today is Monday the 5th. I hope you guys had a great 4th of July weekend. Let's get into the charts. First thing I'm going to say is that there's nothing to be bearish about, right? If there's going to be a top, you will see it on the weekly charts. You'll have a sign and signal of a trend change, like a big gap here, closed below the 40, rejection at the 40, volume confirms, PPO on weekly far from zero line. There's lots of clues before it happens. So that being the case, I don't have that. I don't have that in any chart, except maybe IWM, and we'll get over that when we get there. What I do have though is a lot of gaps on this chart, and at some point they will get filled, right? Structurally, we could fall all the way back to even this one here, 320 to 340, this whole general area, and it still be very, very bullish. That being the case, the weekly PPO is in a bearish configuration, but it is above the zero line. So that means benefit out goes to the bulls. The slope is now curling up. We do have essentially a balance area here going back till April. A lot of sideways action. And if that does in fact hold, one profit target I can give you right off the bat would be about 445. However, I would not be a buyer until we get to some of these gaps. All right, 426.61. 422.60 and 415 to be specific, in the weekly 20. Yeah, we'll wrap up SPY here in a second, but I did want to point out the daily bullish divergence that's been going on since September. The PPO high is really June. Okay, so this is just absolutely pisses every bear off. Essentially, every high they've made has been on lower momentum, and yet they continue to make new highs, and they continue to put in bullish divergences. So this is absolutely full, very, very bullish. There's nothing bearish about any of the S&P 500. We are above this trend line. We were in an ascending channel. We've now broken out of that channel on volume, and the momentum is increasing. That's it. Buy the dip. Strongest sectors, XLK. I like to play QQQ. I like to buy TQQQ whenever my QQQ buy alerts go off. That being the case, the last buy alert we had was during the quadruple witching week, the dip into the 10. So dips into the 10 are the buying opportunities when you're in a wave 3 scenario. You're starting to get this full-blown bull look again, like you had way back here, where she trended for two and a half months. Certainly see that happening here into the end of the summer. No doubt about it. Unless there's a fundamental landscape change, expect every dip to be bought. Expect a dip into 338 to be bought with two hands. Whether that comes at this intersection in time towards the end of July, it doesn't really matter. All we're looking for, whether it happens quickly, i.e. they go up in the next 6 days or 3 bars, 5%, which could certainly happen. There's a big gap here. There's no supply. Or they could start the consolidation on Monday, come all the way back down, which then sets up another massive rally into the end of the summer. So it doesn't really matter how you paint it. We're looking for price to come all the way up here to this trend line at some point. And the question will be, when it does that, does it create a higher volume and a higher PPO reading than the one we had back in September? Failure to do that, and what I will be forced to do is conclude this was your wave 3 high and this is our wave 5 high, and we will start the correction. Again, any correction that does occur will be for buying. So we'll move right on to some of the weaker sectors, right? So XLF still has this flag posture. Nothing wrong here. It is breaking out. It did capture the 20. We do have the bullish cross, but we are below the zero line now. And we do have a bearish divergence on the daily going back quite a while. So this thing could, still cross up, come all the way back up here for the next month, drive every bear insane, staying within this little range above this blue trend line, above the 100, all the while setting up a great short. Right now, this does look like an ABC up to me. And on the weekly chart, one of the things I love to do is buy the first tag of the 20 after setting an all-time high. But we don't have that set up here. You do. However, the volume associated with this candle has me very cautious until she can close above 37.55, and an all-time high would be 38.60. And the given momentum, this posture here, how quickly it went down on volume, has me very, very concerned. That being the case, all I'm looking for to the downside is something like that. And if it ends up being something more protracted, then maybe something like this at the end of the summer, right? At start of fall, whatever it is, which will then put in, I love this monthly chart. Is this a big cup and handle? Is that what that is, right? Is this just some big balance area? And we've now broken above balance. And as long as we stay above this level, what is it, 31 bucks, that the assumption is over the next decade, she could easily go to $200. Or was this your one? This is really what it comes down to. How do you count this? Is this the count? Or is this the count? And then they recocked the gun with an expanding ABC. And this is the real kicker. 50% retrace. Unfucking believable. So, yeah. This could be a wave one. 1, 2, 3, 4. One more high. Maybe it already happened. 1, 2, 3, 4, 5. I don't really care. I'm buying the dip into 31 bucks. Whether it's in 6 months or in 2 months, it will be a stone cold buy. And the stop is real simple. As long as we stay above 30 bucks, 31 bucks, one can assume that we've got a long way to go. And if rates did put in a historic low at the COVID low, then why can't XLF accelerate the entire time rates go up? Very interesting. I'll just leave it at that. We don't need to go into XLF too much more, but it is certainly one everyone has to watch. And if this does start to break down this 36, 35 level, we're going to hit 32 in a hurry, and that's the buy. It's a stone cold buy. Let's take a look at IWM, which is really my risk on, risk off indicator. And she's, since last June, bearish PPO divergence. Now the weekly, how's that possible? Did this entire move up on lower momentum the entire time? And we've bled off from 9 back to 4. Does she have to go all the way to 0? Does she have to go negative? Right? I don't know. I don't know how you really count this one more than a 1, 2, 1, 2, 3, 4, 5. So that would be our wave 3 top. A little ABC or a little triangle, whatever you want to call this. And now we've started our 1, 2. This is too corrective. Let's assume this was the massive top. 1, 2. What is that retrace? You're looking at 90, almost 100% retrace. So if you're retracing 100%, it's likely not an impulse move down. So So I remain bullish IWM. I'm not selling my IWM just yet. I do think that we've got one more leg higher, and I think it comes over the summer. But just be cautious. The Bears are in charge on the daily. A close below the 20, they're really out of time. They can do, one more of these little numbers to start the week. But that's it. You give up this right here, and she will certainly fall to the 200 in a hurry. Absolutely in a hurry. Which could set up something more along the lines of a large ABC flat. Something like this. Right, where the majority of the correction took place in time. And NVIDIA is like the best example of this one, right? Oh, they did set a new high, but it was given up real quick. So that's all I got for IWM. Is it go time, or is this all a bull trap? Let's move on to SMH, which I love this setup. Look above and go, right? This was the top. This was the low. Challenge 1, challenge 2, right? Third time, it's good to go. Any dip into the 10 or the 20 or the 40 is an absolute gift. I would put my stop, right below this level. So 244. And if that's given up, there's a high probability you're going to fill this gap and even possibly the gap down here at 216. But just simply put, I love market symmetry. I love seeing stuff like this. So what's that? 4 and 4, 9, right? So first time the Bears took it down 16. The second time they took about 13. The third time they took about 9. And it took them 2 little corrections to do it. So this to me is just the Bears are waning. You see the bullish momentum increasing, but you still have a bearish divergence here. So we're going to find out real soon. Is this a look above and fail? Or is this some big look above and go? Some big cup and handle ready to roll? And my favorite setup for the last 6 months now has been NVIDIA. And she's so hard to get in. We added here. And I got stopped out like an idiot during this little correction here, looking to buy back at this gap fill that never happened or this POC that never came. And then she triple gapped up, which makes it impossible to buy. Flagged for 3 days and just left the station. This is what an impulsive move looks like. There's your 1, there's your 2, and we're in a 3 right now. We had a very steep 2, so this 4 is likely to be very shallow, and she will then have one more push higher, and that's it. That's all I got left for NVIDIA in this count. It's been a hell of a run since the trade wars in 2018 with Trump and Xi, and now this looks like the end. But again, I'm not shorting this. I'm looking to buy dips. And as long as this PPO is rising in this posture and the bull flow is coming in and the daily chart looks the way it does, you have to be long and strong. But it's a great example of just not letting a stop scenario control the outcome of your trade. Recognize the stop out here was good. It was fine. But when this happened, it changed the scenario. And when she closed above 648, that became the buy. That's the breakout trade. And again, I'm a mean reversion trader. So unless she puts in an ABC correction to a moving average or a gap or something like that, I'm not really interested in the setup. Let's take a look at a few more ETFs. TAN is one I did buy. I do love the look of this daily chart. Recapturing the 200, back testing the 200, ride a rising simple moving average 10, PPO bullish divergence, PPO now above the zero line. So any pullback into the zero is a buy. So that would mean even a pullback into $80, setting up this left shoulder, head, right shoulder, inverse head and shoulder setup. It's also possible she just continues to ride the trend because this is a buy the dip, right? That's a lower wick. The dip was bought. The sellers are exhausting. A green doji inside bar sets up a break above 89.40, and this gap up here at 92 is back in play. I added at the 100, 87.70, and then the 200, 86.80-ish on July 1st. So my stop is the 86.71 low. We close below this low. What will end up happening is I will cut those shares and look to buy back lower. Whether it's at the 20 or the 40 or at 80.80, which would be the right shoulder, is just, remains to be seen. At this point, benefit of the doubt goes to the bulls. However, you've got this beautiful bullish divergence here on the weekly, PPO crossing up after resetting to zero line. Bulls coming in. You do have a little bit of an upper wick here. We are above the POC from IPO, and to me, it's a very obvious 1, 2, 3, 4. We're looking for one more wave 5 setup. The question is, did wave 4 complete, or are we still in something corrective, right? Something like this. So I'm not sure. What I like to do is use these fibs. We've done a 50% retrace. So wave 4 is satisfied. And you do have a reversal candle. You do have PPO reset. So the assumption is we're impulsive until proven otherwise. And what did she do this week? She captured the 20 on the weekly, and that's a big deal. So I like tan. I like tan all the way down to 80.80. I will be a buyer all the way down. And the last ETF here I'll look at is ARK, which looks a lot like tan. So any dip that you're going to get here into 107, 106 is a strong, strong buy. I think this is the setup that's more likely. They come back into 115, 116, this little gap here, 116.98. That was a very, very critical level. Came up to this level, rejected, captured. Back test would be very logical, strong buy. It would also be back testing a rising 40 and a rising 200. We did come up to this supply zone, the first profit target here at 130, put in a doji, which is a sign and signal of a trend change. It's an outside doji that was confirmed by closing lower. What that does is set up a pullback, and certainly the PPO confirms. Everything I see here, the poor structure with these gaps, and the gaps all the way down to that 120 level sets up a nice pullback in the coming week or two. What could also happen is they could just go sideways and let these moving averages come up and really not let anyone in. 123 might be a very shallow pullback, because what would really frustrate everyone would be this 1, 2. So is this wave 1 and this wave 2 of this final 5-wave move up? I don't know. Again, we're going to use the moving averages. We're obviously trending. EMA 5 was lost. The correction, in my opinion, has started. And pullbacks into the 10, 20, and 40 and the 200 are all for accumulating. The leader in ARK is CRISPR. Yeah, this one's been really hard to trade. So I did not buy on June 25th or the 24th. I thought about it. This is what happens when you're a mean reversion trader looking to buy a mean reversion as the stock is breaking out. It does not let you in. So what I'm going to do at this point, and I do see that similar 1, 2, or the 1, 2, 1, 2, 3, 4, 3, 4, 5, like a extended wave 3. I do see that here. I do see tons of volume. As long as they stay above the low of this candle, it's a strong buy. So 146.70 is likely all you're going to get this coming week. But look at that candle on the weekly. This is ominous, right? So she did just cross bullish here. After resetting to the zero, putting in a divergence, a higher low in momentum is exactly what you want to see. But this doji here, I love market symmetry, right? What sparked the bottom could have just sparked the top. Again, this would just be a 1, 2, 3, 4, 5 type setup, looking to buy the wave 2 pullback. Another one I like is ENPH inside of TAN. This has been a leader for 2017. I mean, it's really insane. 65 cents to $181. Stock got added to the S&P last year. This is an American story. It's unreal. That being the case, what's my favorite moving average to accumulate it on the weekly? This blue line has always worked on this chart going back to the lows in 2017. So the assumption is it will work again. It doesn't mean it will, but if you assume that, you'll be right more often than you're wrong. That's what gives you an edge. If you have good money management and an edge, you can make tons of money. We were buyers down here at 111. We sold at the 10 at 140. We did buy this dip, added back at 130, and then sold at 170 to 190 last week. This dip was the textbook setup, gap fill into the moving average 20, an ABC structure, just absolute beautiful setup. This sell here was a little bit more tricky. Took some off at 170. Who knew I could have waited till 191? We had other people that did, but 191 was the next setup. Now setting up an ABC flat, not a zigzag, a flat, given how much she retraced. And again, any dip into the 20, the 40, the 200, the 100, those are all for buying. And right now, the 10, until the 10 is lost, you could make an argument there's no reason to sell anything. So again, this is one of the strongest stocks that we have in the market. On a weekly chart, PPO reset 2-0 line, went negative and crossed bull. This will trend for quite some time. When this happens, you do get massive trends. But again, coming back to the zero line, very rare on the weekly chart. You have to go back to 2018 for the last time that happened. So patience is likely rewarded in this name, and any dip into 150 is a great swing trading entry in the coming days and weeks. The other sectors that I've been playing, QQQ is just unbelievable. So I've been liking Twitter and Amazon and Google the most. FNGU, I believe, has Twitter, and I think that's how it got associated with all those big names. But closing above the 68.36 level is very, very bullish. Again, weekly PPO bullish cross, monthly cup and handle, break above, all-time high, and then pull back to the 10. Textbook setup. This is where we added, and we've been sitting tight ever since. So I do believe a possible monthly chart pattern is in play. I do see a cup and handle set up here, so any dip into the $63 to $60 area will get bought up. PPO above zero. It's possible that you could get a cross bearish back to the zero line here, resetting the chart, allowing her to put in that cup and handle, or even this big inverse head and shoulders type look before ultimately proceeding to set the next high. What is interesting is this candle is an outside bearish reversal candle, but did not get confirmed, and how they've flagged here at the supply zone that was called out. It's just been truly an unbelievable setup, and I do believe this one still has a lot left in the tank. Again, if she gets rejected here at this PPO, you could set up a reset all the way to the zero line. She did curl up after coming to 2, which is pretty good, as she was at 15. Airbnb is another one I like a lot, but I might be cutting this one this week. So we've got a breakout, we've got a back test, we've got a down, up, down on the weekly, right? That's what a flat looks like. That's what a zigzag looks like. We got to come down, up, down, right? We do have that look now. Do have a breakout of the falling wedge. The volume profile going back to the low, 151, and we closed below that. What is this weekly gap here? 151.21. Why can't price get above that level? This is a big problem. And if price can't get above and stay above that level this week, it's highly possible that she's going to be in trouble. And we can look at the daily chart for some more clues. You do have bullish PPO now above the zero line, which is very, very good. You do have all the moving averages below price and in the proper configuration, and you have confirmation now that the 40 is in fact demand. You have a bullish reversal candle, putting the invalidation at 144.25. 3 tags on the bottom, 3 tags on the top. It's anyone's guess at this point. What is frustrating about this setup is she's broken out of this downtrend, back tested now, twice, and every time she tries to get going, gets stuffed at the POC. So it will be interesting to see how she closes this week. If we get any more clues, if PPO gets rejected at this zero line, I'm not sure. I mean, it's obvious. I suppose that this is a leading diagonal higher. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. But we just have to see how this plays out. Okay, so the last few charts we'll take a look at. I do really like DNMR, this inverse head and shoulders setup that we have, this 1-2. Clearly impulsive off the low. Definitely this inverse head and shoulders look. Definitely exhausting supply. PPO, bullish cross, bearish cross, back to zero line, confirmed, bullish cross again. I just absolutely love how this looks. The profit target's $50, and what's really, really insane is that this could be a big 1, 2, 3, and she could be heading way, way higher. It could also just be an A, B, C, and then another big collapse. But for now, one day at a time, just playing the daily chart trend back above the 200, riding the 10, riding the 40. This is obviously demand curling up. This is how you reverse a long-term downtrend. She's been in a downtrend since February. So a buy above 28.62, 29.50 is a strong, strong buy. It will confirm that this is a wave 3 breakout. You will have the largest volume come in and the most market participants in wave 3. And that will set up the momentum to get you to $50. So I really like DNMR. If you're interested in a short setup that we had, this one's coming to an end. CCL, look above and fail, textbook, all the way back in here to the trend line. I would say 25 to 23 is where you cover this trade, which coincides with the SMA 40. But again, PPO not at the zero line yet. So this one could take a while. But once she comes in here to the 40, it's time to buy. So that one is also setting up. And then I guess we'll end with Amazon and then the pot stocks. So Amazon, I really, really like. Weekly PPO bullish divergence setting up, reset to zero line, curling up, look above and go setup, consolidating in a sideways pattern going back to the top in September, building a POC now, as you can see down here at 31.86. We've got the Elliott wave impulse move up, a nice little correction for wave 2, which was, what do you know, 61.8% of wave 1, textbook. and then your next 5-wave move higher. And I think this is what will finally get her out of balance. Remember, you gotta test it 3 times. If this was the first one, this was not the second test. This was the second test. And now you're working on the third test. So any flagging up here, any pullbacks into 3,100, 3,200, 3,300, strong buys. And finally, we'll take a look at CGC and Tilray and wrap this video up. It is getting a little long. So problem I see with this chart, right? We're below that. It couldn't be more obvious, right? Fail. That being said, this is a series of higher lows, and you are building a bullish divergence, but you're also maintaining the bearish divergence. But when I look at this, it's hard to see this as anything more than five-wave move down again, right? So last time we did this was here. So what you're really getting is the symmetrical unwind of this move. So right, that's what's happening. And it can certainly come all the way back down to this B here. Right, left shoulder, head, working on the right shoulder right now. Ideally, right shoulder would hold here at 25. So lose that, then you're probably heading all the way back down to at minimum 19. But realistically, this is your higher low, 1383. So anything above 1383 is a win in the bulls camp. But you know, the monthly chart just looks like dog shit. So red, 5 in a row. I'm not sure why anyone would look at this for more than just a short. Tilray looks a little bit better for sure. Monthly bullish PPO cross, but still well below the 0 line. Weekly bearish, heading back towards the 0 line after being at 33 is at 3. So this is what it means to correct this impulse move. You have to give it time and price. That being said, 1, 2, 3, 4, 5 is still the highest probable count. But the bulls are out of time. They're simply out of time. You lose the 40, I don't like the way this looks anymore. So zooming into the daily, you can see that's already happening. She lost the 40 on Friday. So this sector's done. If they don't come out on Tuesday, Wednesday, buying the dip, confirming this as a bear trap, then price will certainly fail at the 200 and head all the way down to $11. Calling into question then whether or not this was impulsive and whether or not this was just some big, ABC higher within the context of a downtrend, right? So 1, 2, 3, 4, 5 as she goes to 0. Yeah, and that's it. So I hope this helps you guys prepare for the week. If you like the content, please hit the like button, subscribe, and hit me up on Twitter or leave a comment in the video, and I'll get back to you. Hope you have a great day.